Now, I'll be taking a case study for private wealth managers who might be having a decent size of portfolio amount, and assuming that probably they have around 1 million or probably five. Let's start with 500,000 just to be on the lower end, and you are spreading out your investment of this 500,000, half a million, probably in say 4 days. You would be doing an investment of 125,000, and if you are saying that okay, I would keep it to a very low risk as a scenario, you'll be looking at around 63 recommendations per day. So having said that, this if you take this as a scenario with $2,000 risk, which will hardly be zero, you are only buying probably like, I'm just giving an example of 25 shares, or say, I mean $25 stock, you'll be buying 80 shares only. Say if you're talking about $40 share, you're looking at around 50 shares. If you're looking at around 150 per share, you are looking at only 13 shares. So uh, the point here which I'm making is, even if irrespective of the share price, if you are taking it as a 45, the scenario of not being able to buy this 44 shares is very unlikely, because these stocks which get qualified, they have a very high market capitalization and at the same time high volume. So 99.9% of the time, if you're asking for 44 shares, it'll get filled up. If you use interactive brokers, your commission will be very low. It will be probably less than $2, around $2 round trip. So, but what you need, and most importantly, is the number of recommendations. So, there can be two scenarios. Either you trade it manually and put the based on the recommendations which you would get, and I will show you how these daily recommendations might come to you. If you take a look at subscription for farms, you'll be basically getting the symbol, the day for which you would be trading, the last price of it which you need to validate. Best practices suggest that if you're doing it manually, probably you do it at around 10 o'clock. You can also use automation, where I can help you with, and your target price. So practically you're looking at two things: which stocks and what is their target price. Based on that, you have already seen here that how it makes it to the target price, as I was doing the demonstration with breakouts. So the moment you hit the target price, you are exiting out at this type of a percentage. So having said that, this is where I would like to show that if you are looking at around $500,000, spreading it over, say for example in 6 days, you are utilizing your funds to 123% here. You might be needing 42 recommendations a day because you have lowered your risk factor. But if you increase your risk factor to say $3,000 per stock, you would be probably needing much lesser recommendations, which is $28, around $583 shares a month. So your subscription for the recommendation would depend on how many recommendations you are asking for, and there will be a pricing based on that for the number of recommendations. But very typically, very under typical circumstances, you would be using, if you are using 500,000 within within the first slot itself, which is one day, you are probably rotating 30% of the money in a day, which is equivalent to 525,000. So effectively, your investment of 500,000 during the end of the month, you are talking about $617,000 of investment, which is roughly 123%. So you are looking at around 152,000, which is roughly around 30%. So as you reduce the spread, that okay, I want to do it in 5 days, you would notice that your ROI percentage gets better here. The thing is that based on the recommendations, you're spreading out your total investment of half a thousand, so say I do it in 7 days, you'll definitely need much lesser number of recommendations, which is 24 a day, 500 a month, keeping your risk at $3,000. So individual wealth managers or private wealth managers may find this very useful, and of course I have a limitation with the number of shares I can recommend a day. Based on this strategy and based on this what you have seen, we are scanning the entire New York Stock Exchange, out of which handful of stocks get qualified. uh, Based on my experience, if the markets are very bull for a long period of time, you might get around 100 plus, around 100 and 125 shares qualified for that day. Say for example, which I'm talking about 16th of January, if I'm taking the scenario for 16th of January, which is yet to come, we are talking about 85 shares which got recommended because the market was not so bull. But as the market continues getting bull, you will notice that the number of recommendations are also increasing significantly. So this gets published, so any wealth managers can take advantage of this information. Here this is a purely the research content which gets published from here, purely proprietary to us, and it gets published and gets delivered to our members, who could be also a private wealth manager. So by having said that, if you're taking a look at this ROI, you're talking about around 26% depending on the spread. So it all depends on how quickly you want to rotate your fund. So if you reduce it to say 4 days, you'll notice your ROI goes to 45%. So but at the same time you would need a lot more recommendations. Keeping this in mind, that this recommendations per day will not be more than, say, you can keep an average of say 80 to 90 recommendations per day on an average. So if you're talking about 80 to 90 recommendations per day, which means even if I take say 90 recommendations per day, in 21 days you are talking about 800 recommendations a month. So yes, I cannot promise that we can get that many recommendations, because this algorithm or the predictive model which you're seeing here will only qualify stocks if the markets are bull, and as the market gets more and more bull, these stocks get more and more qualified from the entire stock exchange. So this is a very this is a technique which has been developed over years along with its methodology and best practices, and private wealth managers can take advantage of it. So if you're looking at say $1 million, this is $1 million portfolio where you might need 83 recommendations, keeping $3,000 as your risk per stock. So 83 recommendations per day may be possible. I'm not saying it won't, but if the markets are bear, there may be scenarios that every day 83 stocks do not get qualified. But having said that, even if they do during a month, we can make it to 1700 recommendations a month in 4 day spread. We are talking about a good 45% ROI. So try it out. It's a very useful research. It's helping me as an individual investor with a small amount. It's helping other individuals also who might be interested with a very smaller amount can jump in. But at the same time, private wealth managers who are dealing with $500,000 or 1 million type of a portfolio, you are still looking at around 45% for ROI. If you are not doing this ROI through mutual funds or bonds, you may consider taking advantage of this. So having said that, the goal here is to spread it out evenly so that your funds are utilized more effectively. I would recommend a scenario of say 1 million, a fund manager with 1 million to spread this in 7 days with 48 recommendations per day. which will be 1000 recommendations a month. And if you can maintain this average of 1000 recommendations a month, this is going to be your spread, and this is how the ROI would eventually look like, around 26% a year. So these are very realistic numbers. You can try it, and if you there is, as I said, we have no contract. There is no contract. If you like it, continue using it. If you don't like it, you don't have to. But these recommendations will come to you. We will not suggest how many shares you need to invest, but the best practices you have seen here is to spread the money equally across all the investments you do. And if you follow that principle, you would be basically having a fixed number of shares which you would be investing on, and therefore your money would be spread out equally, and your risk factor, which I have just spoken here, is also going to be spread out equally for all the stocks. So this is a good proposal even for private wealth managers. You can leverage from these breakout informations which is happening every day in the stock market. This saves you time, this saves you cost in terms of maintaining such high-end research, and at the same time you can be focused on what you do best for your investors.